Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. This segment is sponsored by the Equity Management Academy. What I would like to do this morning here, Monday morning, is basically to review the report that I published here over the weekend for the gold and silver cycles. And basically, the decline from the October highs was in line with the daily and weekly cycles for 2015. Consequently, current prices is a retest of previous lows and potentially the completion of this correction as projected from the multi-month bounce from the July cycle low. This pattern signaled that the second most powerful cycle convergence of the year could produce a double bottom, equal or lateral lows before a sustained advance could occur into 2016. It appears the ensuing 2 to 3 week sell-off has matured for gold and silver. The drop into the November 2nd to the 6th projects the completion of this intermediate bottom by November the 27th. That is, if the current pattern unfolding is corroborated by these cyclical expectations. The multi-month bottom and expectations of a retest of previous lows made November 14 projects a subsequent low during the November 16 through the 27th time frame. And it is the specific time for this anticipated final bottom to take hold. Let's take a look at the weekly technical summary. In gold, the trend momentum is bearish. The price momentum is 1079 and is bearish, but what you want to do is take a look at a close above 1079 to negate this bearish sentiment that we have coming into this week. It tells you if you're short to exit your short positions at 1060 to 1044 for the gold market. And so far today, what we have seen is basically lows down to about 1064.80. Not even breaking the previous lows of 1062 that we made last week, which were anticipated in the report as well. So this report is basically telling us where we may want to cover our short position or a bearishness, or if basically where we can expect the market to reverse from here. On silver, the trend momentum is 1518. That is bearish here. The price momentum indicator, which is the mean of the week or the metrics of the week or the pivot point of the week, is 1418. And what this is telling you basically is that even if this is bearish coming into this week, a close above 1418 would negate this bearishness. A close above 1079 in gold would negate this bearishness. And it tells you that you want to cover your short positions in silver in the 1395 to 1376. And the low today in silver was at 1385 excuse me, at 2:30 a.m. And this is what I keep referring to, that most of the big moves or most of the prices will have a lot of activity overnight in Hong Kong or when London opens, and it usually will here it certainly tested the this levels of support of the buy one buy two level here that was indicated on Saturday for you on this report. And the market reacting this morning from a low of 1385.86 actually is pretty bullish, and it's activating, obviously, as you can see, a weekly signal here that we published, in fact, over the weekend for a swing trade position here to all our subscribers, and indicating basically the targets above of about 1438 to 1462 for this particular trade. So today, once again, we came down into that B1, B2 area, which I mentioned to you are levels of demand. The market, the price identifies demand, and on a daily basis, basically coinciding once again with the weekly signals with a perfect harmonic convergence, perfect harmonic alignment. And this is where we pretty much are observing the market action here into these levels here, as far as demand is concerned, or possibly demand being greater than the selling pressure that has come down or has brought the market down here in the last couple of weeks. So we want to keep in mind where we are here with regards to the cycles as well, and act accordingly. One of the things that I would like to address here, particularly when it comes to how we trade these positions, what I have been doing, and obviously for the past 4 years, is I have been documenting all of the trades that we do live in the room here on this website. And this is how we've been able to build this track record, which is not based on back testing. It's not a system that essentially is based on past history. What we have done here is document every trade that we have executed in the room with time in sales. You can take a look at any of the trades, and we can document the trades, in fact, from the initial report that we sent to you over the weekends, the day before. We can track all the signals to the actual report that we publish, as I said, and you have access to this information the day before. So we pretty much take our own medicine, so to speak, and what we're trying to do here, and what we're doing basically is being extremely transparent in showing you what we're doing. So you can take a look at any of the trades in the EMA to Trade Live Signals website, which documents everything that we do here in the room. And you can go to updates. Obviously, you can check out the daily updates that we do here based on the daily activity that we do on this live account that we have, which is a $50,000 account that we started trading basically since the beginning of August 3rd, and we've been able to pull out of the market about $68,646 in profit so far on closed out positions. Now, these trades here are trades that I have called out in the room. These trades had time in sales. Every trade that we have done here has been documented in the room with time in sales. So, as far as being transparent, this is pretty much as far as I can go to subscribers that come to the room, that want to follow what I do for your own account. One of the things that I want to emphasize is the fact that I'm not a broker. I'm not your broker. I'm not a money manager. In the past, what we've been doing is, documenting the trades live here in the room. For the securities account, for the futures account, and we have tried to maintain as clear a transparency in showing you how we're doing it, how I'm doing it, by executing the information, the same information that you have access to here in the room. Right or wrong, profit or loss, we document everything that we do. And you can see it all here. Based on requests that have been made in the past with regards to money management, or whether we are able or capable of managing money and so on and so forth, and what essentially what we have created for you is a couple of situations here that will give you an opportunity to make a decision in terms of how you want to take advantage of this information. If you want to trade your own account, you can follow the information that I follow, that you get access to every day, and use your own discretion as a trader. I think I make it very clear. If you go to videos here, we have trading guidelines that I provide, where I pretty much lay out exactly how this algorithm should be executed. And, you have two choices: to be conservative, aggressive, and also you have 3 levels of stops that I give you every day. For every trade that I do in the room, you have access to 3 stops. You, depending on whether you're a conservative trader or an aggressive trader, on the setup, you have 3 levels of stop. And if you're an aggressive trader, then you got to be willing, to understand the dynamics of being an aggressive trader, and be able to connect when the market reverses with a reversal stop right away. If you jump in on the opening, which is the aggressive trade, if the market closes above, then you buy the opening of the next bar. If the market opens above the VC daily, mean or pivot levels, initiate a long position. So this is the opening, is what the aggressive trader strategy applies to. The conservative, which is what most of the time I use, waits for the close of the bar, of the 15-minute bar. And then your stop becomes the level below, and your target is sell 1 and sell 2 levels. And I say here very clearly, if you trade around the mean or pivot point with a regular stop, you got to prepare to use reversal stops, as the market defines the bullish or bearish energy around these price levels. It's the mean, it's the pivot point of the week, of the day, or of the month, depending on what it is you're trading. And you have a second stop choice. You have the stop close only. You have market on the close if it closes at the end of the day, or you have a hard dollar stop, which I say, and I suggest $500, which is what I use when I want to execute that kind of order. So not only do you have access to the information a day, a week, a month, a time, and now I'm providing a yearly outlook, but you also have to understand the methodology of the stops that if you're trading your own account, then you are responsible for the protection of your account. and the management of your account. And I give you as much, as I say, transparency here that you can follow very, very successfully. And, I go into detail. Most traders use straight stops as risk management. And what we have found is that stops are taken out prematurely and can be identified by large traders. The VC Daily Code uses stop close only, which is the close below the level right away, the closest level up or down, short or long. Market on the close, which means, you wait for the market on the close. And if you want to refer more in terms of the explanation, you just click on MOC and it would take you to Wikipedia that will explain to you what basically that order means, or the different types of orders that you can use. So I try to provide you with, as much information that it will help you basically to make an intelligent decision here in terms of the application of this tremendous algorithm, and as clear as possible. And I do emphasize the fact that additional considerations. If you trade aggressive strategies at any level, be prepared to use reversal stops and take next signal automatically. Because by the time the market closes on the conservative side, it will kick in another signal. So you got to be prepared to activate that signal as well. If you use SEO on buy one and get stopped out, enter on signal above B1 again, or after a test of the B2 blue level or demand zone below, when it crosses above and closes above that B2 level, then you use an MOC stop. Then you as a trader can decide to take the aggressive or conservative strategy, obviously with a signal, and follow the same methodology. The same methodology applies on extreme opposite levels of sell 1 and sell 2 as well. When it gets up to the red zone or the supply zone, you do the reverse basically, which is the extreme above the mean. The red levels that we have here, they indicate high probability to go short from these levels. It identifies for you where the supply is. But it's a high risk if you want to buy between sell 1 and sell 2, or if you want to sell between buy 1 and buy 2. It's the highest risk because you're looking at demand down here in blue and supply down here in red, and you don't want to buy into supply. If it's identifying for you, that's where the supply may be coming in. The blue levels are a high probability to go long following the same stop methodology. The stops are to be used at your discretion. If you want to see the results, follow what I do. And follow this methodology religiously, which is really what I do. You need to be clear, basically, on a few things. Your initial strategy, from neutral, aggressive, or conservative. If you want to make decisions on your own, then use these suggested guidelines with individual trading discretion. Now, when we trade, as I said, we document everything on the updates, and you can check that out on your own time. What has happened here in the last few weeks, basically, is that we have entered into a more regulated area by basically establishing a hedge fund, which we're trading currently at the present time. And we are regulated. And we have to be very careful as far as, how we do things. We basically have transferred the live trading to the equity group partners, which follows the same methodology that we applied for the Equity Management Academy. Our approach to wealth management is driven by the same applications we have employed for the Equity Management Academy since the firm began trading in 2012. And these are the results, obviously, that you can see we have been able to establish since 2012. You can click on results and you can see all of the different trends and trades that we have done in the room. What has happened here is that since November the 4th, which basically was the last date that you see here on the updates, particularly for the securities and options account, that we have transferred basically the now track record to be completely disclosed by the real live platform that we're using to trade the hedge fund, which is in the Interactive Brokers. This is the real McCoy. And this now you can have access to on a monthly basis, and you can see a documented, audited, certified performance of any open positions that we have, or any trading activity that takes place in here. Ideally, we'll try to duplicate what I'm doing in the trading room. And just to fully disclose to you, we are down about 8.92%. Our best return so far since we started was 1.81%. Our worst return was 3.19%. This is the hedge fund in all the positions that we have in the hedge fund, which you are going to be able to have access to every month. As we published this information every month or every quarter, you will be able to have access and see that the recommendations that I have made in the room, the open positions that we call, that we're carrying, we are carrying it ourselves. And this is the reason why we suggest for you to stay put, to hold on to these positions as we are doing, as a swing and as a position trade. And as I have been saying here, pretty much, we're using this correction in this market to accumulate intelligently any opportunity that we have with very selective and specific instruments that meet the criteria for us to trade the hedge fund and be able to produce the very same results that we have been able to produce for the Equity Management Academy since 2012. So there's not going to be any kind of ambiguity as far as anything that we do here in the room. There's never been any kind of ambiguity. Maybe your inability to understand what we do and hopefully did not give you, the wrong impression. But we pretty much, I think, offer tremendous value to what we do with published information, reports, our own opinions, and of course, using our own proprietary algorithm is making the difference for us in terms of what we're doing. So we are in the middle of a transformation period for the Equity Management Academy. I want to congratulate the Academy for producing such valuable market intelligence that I believe will continue to prove itself. And now you can see pretty much and track how the hedge fund is trading this information that you have access to here live at the Equity Management Academy for a fraction of the cost. Once again, if you have any questions at all, please feel free to contact me directly. Email me at support@ema2trade.com. You can Skype me at ema2trade.com, or you can call me directly at 805 area code 418-1744. U.S. toll-free number is 877-733-1511. Once again, my friends, I want to thank you for the opportunity to share this information with you. And I look forward until next time. Have a great trading week. We'll talk to you soon.